helpful to take a minute to reflect on the increasingly dominant role that technology plays in our lives, as well as the economy. Over the last 150 years, we have seen the invention of the automobile, the airplane, the personal computer, the internet, the smartphone, social media, etc., not to mention huge advances in medicine and biotech. And if anything, the rate of technological growth has been accelerating. With that, employment in small firms and in technology firms has become a dominant engine of growth in the labor market. Venture capital as a way of funding nascent tech firms has also grown astronomically since the late 1970s. And it has been instrumental in helping new technologies to market, not just through funding, but also through the various value-added activities that venture capital firms provide to their portfolio companies. Just to give an example of the historical impact of VC, among publicly traded firms in the US that have been founded after 1974, 42% were at one time or another backed by venture capital, usually in the very early stages. These VC-backed firms represent 63% of the stock market value of all US public firms founded since 1974, and 38% of their employment, with over 3 million employees. Among these firms, you can count the likes of Amazon, Apple, Facebook, and Google, but also companies such as Starbucks, Costco, and FedEx that you might not be aware were VC-backed at one time or another. Now, since VCs get to see the next big ideas very early on as they are being pitched by entrepreneurs, I think it makes a lot of sense to ask venture capitalists where they see technology currently heading. So on that note, let me stop talking and turn to Minnie first and ask, what are the kind of technology trends that you currently see being pitched, and which do you think will revolutionize the world as we know it?
Thanks, Arthur. Thanks for the introduction. So I'd start by just saying, so you mentioned my podcast, and I have VCs on my podcast, and I often ask them, would you recommend entrepreneurship to your children? And universally, they all say yes. So I think it's a great time to be an entrepreneur. At 10110, we're entrepreneur led. So we often have entrepreneurs come to us with the great ideas, and we like someone who's deep in an industry and can kind of explain the future to us. That said, I'm happy to talk about some trends that I've been seeing. One trend that I was going to choose is sort of the Internet of Things and the power of sort of the connected world. And then I heard in your introduction that you said that that's Barry's specialty. So perhaps he can pick up wherever I leave off. But I think it's clear that what we sort of saw with the beginning of the internet was low bandwidth, Google, Amazon. Then we got, YouTube, Facebook, picture sharing. But now everything connected. I think the power of the internet is in its early innings, and we're all going to pee in toilets, and they're going to know, they're going to analyze our pee, and the shower's going to check our moles for us. But I was listening this morning on my jog to Elon Musk, and he was on Kara Swisher's podcast talking about meat flaps. And if you haven't heard him go off on meat flaps, it's a great little segue. He talks about aliens come to Earth and they look at humans and they say, they're all made of meat. And it's this sort of idea that, our interpretation of the world is very limited, and the way we speak, those are our meat flaps, according to Elon Musk. So I think there's a lot of opportunity here in taking, the way we analyze the world from all these connected devices and applying that to all sorts of industries. So we look at manufacturing, we'll look at health tech, where, doctors are looking at screens. We'll look at security, people looking at screens. That's all going to be replaced by computers. I think that's a really interesting trend. So I'll start there.
All right, Barry, you want to bounce off of that one?
Sure. There's a lot of different things that VCs are investing in now. A lot of times we solve for things like boredom. Autonomous vehicles solve for things like convenience. But I'd rather talk about some of the bigger issues that we have in our world. I think we're going to see a resurgence in healthcare investment. Healthcare was sort of down in the mid 2000s, but it's come back strong. And obviously with the pandemic, it's front and center in terms of the technology and innovation that's happening in healthcare. And obviously we have issues like cancer and other places where we're seeing a lot of venture investment. I think that's going to continue, and we're going to see a lot of very highly valued companies that will be healthcare oriented, and also leverage data to facilitate the healthcare. The second piece is climate. And, in the mid 2000s, we all invested in clean tech, it was called back then. And generally it was a miserable failure because with clean tech, it's very, very high capital intensive. So you have to throw a lot of money into the problem before you're able to actually produce a product. And then when you have a product, you put it into a market that's dominated by commodity players. So it's a very difficult market. It's changed though now, because we all realize that climate change is a real thing. We've all been impacted by it in one way or another. And so we need the new green tech to happen. And how is it going to happen? Well, I think that there's better technology now. There's more consumer awareness of it. And I think the government now with the Biden administration, assuming there's a Biden administration, is going to actually partner with private investment to try to make it happen. So I'm looking forward to see what can happen over the next 10 years as we tackle this major problem for us.
Great. And just hit the pause button here for a second. If any of the attendees have any questions, we'll get to the Q&A towards the end of our first bit here, but you can go ahead and put your questions into the Q&A as we go along, and then hopefully we'll have time to get to all of them towards the latter half of this webinar. Now, another aspect of technology is that it makes the world an increasingly smaller place. Right? It is now much easier and cheaper to travel, to communicate, to learn new knowledge and sell a product or service across the globe than it was, say, 20 or 30 years ago. And given these trends, many VC firms have opened overseas offices. Technology hubs have sprung up in many other countries. Silicon Valley isn't the only place anymore. Israel being one particularly telling example, I think. And startups really have to think of their markets on a more global scale. Let me ask Barry, how has globalization affected your view and your investment activity and your portfolio companies?
Well, I mean, globalization has many different facets. First of all, if you go back to the early 2000s, actually the late 90s, venture capital was mostly a US phenomenon. 90% of venture capital dollars flowed from the US into the US. Today, if you look at the so-called unicorns, that is companies that are valued more than $1 billion, more than 50% of them are outside the US. So this is both an opportunity and a challenge. It's an opportunity that, we have a global market now. And so you have to, as a private company, serve a global market, and you're competing with global players. For the US, it's a challenge because innovation is slipping out of our hands into other countries, and we're not competing as well as we used to. We're not being as friendly to immigrants that want to come here and start businesses and create US jobs. And we have to have policies to support that. So there's all sorts of reasons why the world is catching up on us. And it's important for us to continue to be better at innovation than the rest of the world.
Minnie, do you want to react to that?
Yeah, no, I had just read an article recently saying, citing the visas, just to pick up where Barry was talking about, that Chinese F1 visas, the student visas, are down 99%. Sort of year over year. And, a lot of that is COVID and travel, but it's, it kind of goes to Barry's point with that there are some challenges right now. I think there's the fact that venture and entrepreneurship used to be more of a black box and you had to move to Silicon Valley, is no longer the case. And I think there's advantages because you're seeing these, hubs pop up, and then you can have capital investing in local entrepreneurs. But, and other advantages too, which is the globalization or even just being able to launch startups nationwide. So sort of state by state regulation has, I think, enabled a lot more venture scale businesses, because you can build a business that serves not just, California, but serves the United States or serves the world. So I think that is enabling more sort of venture scale businesses to be built if they can serve other markets. And
do you look abroad when you are sourcing deals? Do do you look at certain areas? Do you look at certain regions? How does it affect the deal sourcing?
For us personally, there is a lot of value to having a local network. So we're here in LA. We have a lot of pipeline that is LA, and not by mandate, but by virtue of being out in the community. We want to get to know, the USC community. We think it's a very powerful community here in LA with unique characteristics. So we look for that. We definitely do see innovation hubs. You cited Israel. We did a recent investment actually in a Jerusalem-based company. So there are definitely some great tech hubs that we see emerging, but we are probably less global than Barry. So I'm curious, if he wants to opine more on globalization.
Yeah, and Lightspeed has offices in many places. So maybe Barry, do you want to talk a little bit about that?
Yeah, we started as an early stage firm investing solely in the US, and over time in the mid 2000s, we expanded into China and India, mostly because we saw a burgeoning middle class and the emergence of core technologies in those sectors. And I think those markets have both proven to be very, very good markets, with China sort of ahead of India a bit. We had been investing in Israel for a long, long time. They are the startup nation, the original entrepreneurship country. And we've been investing in them since the mid 90s. And now they've obviously emerged as probably the highest per capita of venture investment in any country in the world. So we love investing there. And then, of course, Europe has really emerged strong as a center. And we're seeing Latin America, we're seeing Mexico, seeing Canada. This is a globalization. What I think is important for the US, though, is this not to be just a Silicon Valley thing, right? I mean, Los Angeles is an emerging center of entrepreneurship and investment, and it has to emerge as an important sector for the United States. We've got to have more investment in the center of the country, right? In the Indianas and Michigans and Atlantas. We've got to get more venture investment, more venture ecosystem in those parts of the country for us to maintain our leadership.
And how do you see the role of education, and then particularly the role that tech can play in education in preserving that innovative edge or building on that innovative edge that the US had historically?
Well, I mean, for one thing, I saw a question on what do you think about Zoom and the ability for us to all conference together. And I think we've all learned that we can run a company where people don't work in the same physical location. So why can't we build a company that has maybe it's headquartered in the Silicon Valley, but it has a bunch of workers in other states and employees, and or vice versa. And so I think you're going to see the emergence of these multi-state and multi-region, multi-country companies, because we're all getting comfortable with our ability to work together remotely.
And I moved from Silicon Valley to LA, and I also think that when you have a local ecosystem and it's a place that you grew up with, it's a community that supported you, there is a loyalty and a depth of connection to the community that I think is really important, as opposed to when you sort of first saw Silicon Valley as more a place of people who had moved there from great engineering programs like USC because they felt like they had to be entrepreneurs there. And so you've got this group of people who've relocated. The one thing I'd add on education, sorry, unless Barry, did you want to jump in?
No, please.
Okay. No, I just think education, it has been interesting to see what has worked. I don't think MOOCs have been like a huge win necessarily yet, but you see sort of the General Assembly, you see certain areas have worked very well for continuing education in particular. And so I think there's becoming if you can learn a skill, like you've seen, teacher training has actually done well, I believe, for sort of the online continuing education, because the cost is a lot less. And these are jobs where the amount of debt that you are in when you come out of that program matters a lot. And so you can, these programs where you want to come out with a lot less debt, some of those have done very well, and be interesting to kind of look at which verticals I think, do very well with education. I have a first grader. I think you can see how education that teaches skill online might work, but the social emotional piece might be where all of the in-person stuff is really focused.
And well, here's a question. I said we'd keep the Q&A for the end, but I think this is a pretty pertinent one. If you think about other countries, how would you foster the VC industry? So I guess you have to play devil's advocate here for a second. How do you foster the VC industry in developing countries? Countries with a very primal VC ecosystem at the
Well, I mean, everyone's trying to answer that question. I think the country that did it the best was probably Israel. A combination of very good educational centers, a lot of government assistance to get companies off the ground and their initial funding, because there wasn't a large VC capability. Over time, that was built up both locally, and VCs from the US came to Israel, and now you had an ecosystem, but in the beginning there wasn't. So a lot of things were government funded. And what happened was you had this first wave of entrepreneurs that would start companies, and they'd sell them really quickly because they could make a little bit. And then the VCs were like, why can't we keep going? What happens then? You get them the second time around, and of course they start thinking bigger, and the whole thing starts to develop itself. And those entrepreneurs also become mentors to the new entrepreneurs, and all of a sudden you build an ecosystem. So I think Israel is a very good model. And other countries are starting to take notice of that. And so it's a combination of factors to get the flywheel going.
Mm-hmm. And we'll move on to a different topic here in a minute or so. But to close this off, where do you see currently, in terms of the area of the world, a lot of growth in entrepreneurship? We talked about Israel. Are there any other areas that are currently up and coming that you see becoming much more prominent going forward?
Yeah, I see. Well, obviously, China and India are already there. Parts of Europe now are emerging. The smaller countries are emerging. Southeast Asia, absolutely, is emerging as a center, and Latin America. And the center of the US, by the way. Right?
Wonderful. So another issue that's been trending over time in the last 20, 25 years is the increasing time to liquidity for startups. And so I just looked at the CB Insight Money Tree VC report for Q2. It showed that the average time from first financing to liquidity is now just over 6.5 years. That used to be a lot shorter. And many startups, of course, are taking much longer than that. What forces do you think have caused this phenomenon? And how have you yourself adapted to this lengthening time to liquidity?
I'm not sure I know on the global forces there it has caused. I mean, there's probably a chicken or the egg, right? Which is there has been a lot more capital in the private markets. And so companies can stay private because they've had that capital available. But also there's probably a fair amount of success in the private markets from the Ubers and Airbnbs staying private later that has led to having more capital available in the private markets. But Barry, you've been doing this longer than I have, so I'll let you share your thoughts.
It's a funny thing because you said, it's an issue, but in some cases it's an opportunity. Because, if you look at the shift of value, when companies like Amazon and Cisco went public, they went public at valuations around $300 or $400 million. And so most of their market cap accrued to public market investors. Whereas now you're seeing companies going public at, 3, 5, 10, 20, billion-dollar valuations. And that value is accruing to the private investor. So there's been this massive shift of value, which has actually increased the size of our industry. And that's why you see venture funds having these later stage, pools of capital to take advantage of that opportunity. Having said that, 6.5 years would be awesome if that was really true. I think it's closer to 8 or 9. when you take all the companies into account. I know for us, Snap was 5, which was fantastic from first investment till the IPO. But generally, we're seeing 7, 8, 9 years. And that's because there's a lot of capital available to people. And why go public and be under the scrutiny of public market investors when you can stay private? You can still get liquidity in some cases through the private markets. And now we're seeing a lot of different options to IPOs, right? We're seeing direct listings and SPACs, which I think we'll talk about later.
Yeah. Let's dive into that. I think that's a good segue. So we see some newcomers on the scene that we didn't really have, at least not prominently before, such as the direct listings, so Spotify, Slack, Palantir, those companies and that have gone public that way as an alternative to the traditional IPO. Traditional IPOs themselves have gone down quite a bit relative to acquisitions. And then, of course, there's the recent phenomenon of SPACs, these special purpose acquisition companies, where a publicly listed shell company acquires a startup, making it a publicly traded firm in the process. And those were nearly non-existent a decade ago, but they've exploded in the last few years, and they're all the rage this year. To date, I just looked up the numbers. Latest I saw, there were 169 SPAC IPOs announced in 2020, and $95 billion worth of M&A activity has been recorded. And last year, that was just $30 billion of M&A activity, and that was a banner year in its own right. So, Minnie, since Shift went through SPAC just very recently, what have you learned about SPACs over the course of Shift's process to go public in that one?
Yeah, I mean, kind of what you said, which is 6 months ago, 9 months ago, I hadn't heard of a SPAC, and now everyone I know is starting a SPAC. So, and did you say 160 this year? I think there were 230 IPOs total last year.
Yeah.
So just to put that in perspective. And, I hadn't really understood how SPACs work. So it's just what you said, which is, they're special purpose acquisition company. They have no operations of their own. And they provide this additional option for a company like Shift or a company like many of the companies in our portfolio that have been around for a few years and are looking for different options. So, for us, it was a good option. One, we started looking at this at the beginning of COVID, and there's a lot of market uncertainty that with an IPO, you get priced and you don't know, you leave money on the table. You don't know what's going to happen. With a SPAC, you agree on the price ahead of time, essentially with the SPAC that is acquiring you. So there's less of the macroeconomic concerns and issue there. You also don't need to be these, what Barry alluded to in terms of the IPOs that are happening now, which are these multi-billion-dollar IPOs. With SPACs, I think you maybe rule of thumb, you take a size of the SPAC multiplied by 4, and that's, I'm sure they vary, but that's sort of roughly the size of the company they're looking to acquire. And a SPAC might be a $200, $300, $400 million vehicle. So they're acquiring companies that are order of magnitude $1 billion. So there's an opportunity to exit if you are not yet of Airbnb size. And, I think you also look at, you look at who's raising the SPACs. There's a lot of smart people raising SPACs right now. And it used to be, I think, that a lot of that smart money people who were doing it, I mean, a few years ago, it was a little bit more on the, I want to say shady side, but less mainstream side of things. But it was, I think, more of the SPACs I had seen before were sort of financial people led by the financial Wall Street types. And increasingly, when we were looking at SPACs, this is someone, do they bring operational expertise in the business that we're building, that sort of thing. So I think sort of the options of the different SPACs has grown, and and the other thing to mention is the timeline is much faster. So you asked about my experience. It's great. You can do a SPAC faster than an IPO, maybe half the time, a few months, 3 months, 4 months, rather than an IPO, which might be a lot longer. It also means everything's on the compressed timeline actually when you're going through it. So it feels like all the messiness and paperwork and legal stuff is also that much faster, but obviously a great option for a lot of entrepreneurs and VC funds as well.
Yeah, and certainly now that companies like Shift and Virgin Galactic and DraftKings and more recognizable names have done these kind of SPACs, to your point, it lends a lot of legitimacy to the process. Barry, do you have any experience with SPACs, and what are your thoughts?
Yeah, we've had some companies go public via SPACs. We've had some companies, obviously IPO. Haven't done any direct listings yet. That's a more specialized product. The problem people say with IPOs is they get underpriced, and there's this big jump in the first day of trading, and the company's leaving all that on the table. And also IPOs aren't available to the average Main Street investor. So direct listings try to fix those two things. The challenge with direct listings, of course, is that you can't really raise primary capital for the company. And so, SPACs are actually sort of a hybrid, by the way, of an acquisition and the ability to, with a SPAC, you can do a PIPE and you can raise primary capital into the company. So, there is some goodness to SPACs, and it's probably easier to do a SPAC than it is to do an IPO in terms of all the regulatory work you have to do and time it takes. But I think today still the best companies are picking IPOs. And then there's a second tier of companies that are picking SPACs. Some of them are more concept companies that require a lot of funding. Some of them just aren't ready to be an IPO, but that could change over time.
So you would think SPACs are here to stay? Do you think it's going to grow as a phenomenon, or do you think it's we're seeing a big bump now?
Oh, yeah, they're here to stay. Only thing is, can we come up with a better name for the SPAC? SPAC is such a bad name. It sounds like something you use to fix your wall. IPO sounds so great. We got to come up with a better name for a SPAC. But yeah, they're here to stay. If you look at the numbers, tens of billions of dollars raised in SPACs, and those are likely to be paired up with companies over the next year. Some SPACs obviously will just not pair up with a company, and they'll just not happen, so that some of that capital will go away. And you also have to account for the fact that when a SPAC does de-SPAC, it merges with a company, there's typically a PIPE that's involved, so more capital is coming into the company. So it's definitely a vehicle that is a viable vehicle for a lot of companies to get public.
So how would you, if you're an entrepreneur and you're sitting on a company that's reasonably late stage and you're thinking about exits, how would you decide, do I want to do a SPAC? Do I want to do a direct listing? Do I want to do a traditional IPO? How do you trade those off against each other?
Well, I think if I'm a top tier company, I want to do an IPO. That's still the that's the golden ring, is doing an IPO. And I'd probably prefer to do an IPO.
Is that for visibility reasons?
Yeah. Well, I think the value that accrues to companies, if you look at the trading values of IPOs, it's higher than SPACs. If you look at the coverage and the brand recognition you get from an IPO, it's greater than a SPAC, all that kind of stuff. And I think for employees, it's probably a little more exciting to ring the bell than it is to get acquired by a SPAC. That could change over time, though.
Barry, you get to ring the bell.
Oh, you do? Okay, you get to ring a SPAC bell.
If you do, like the name
or you get to, you get to spackle a wall or something. I don't know.
It's all on Zoom nowadays, anyways.
Yeah, it's all on Zoom. The direct listing, though, is also an interesting alternative for companies that are really good brands, right? We saw Spotify and some other companies do it that don't need the capital, that don't need primary capital. So I think direct listing is a really good alternative for those very, very high quality companies and brands. And then SPAC is sort of for the next tier down of companies. There's no, it's not bad to go public via a SPAC, by the way. You still are a public company. You still get to trade up and do all the things you're doing, and people get liquidity over time from it. So it's important for the employees.
I think also Barry just alluded to the fact that there's different types of companies that this appeals to. And with the SPAC, you do get to project your financials. So you get to raise based on projected years out. And so for companies like, an electric car maker, as a good example, where it's going to require a lot of capital to be invested before you're, actually on the road, generating revenue. There's a certain type of company that I think works very well for a SPAC.
All right, let's change tack a little bit here. The final topic before we launch into the Q&A part that I'd like to broach is the all-important issue of diversity, inclusion, allyship. VC, as you are probably very well aware, has not been a diverse ecosystem in the past by any metric. But in a sign of hope for things to come, a great deal of attention is being paid to this issue at present. Let me start with Minnie and ask you if you can maybe describe your experience as a female co-founder in this male-dominated Silicon Valley world.
Yeah, well, I mean, you know, I was in tech and I was also in used cars. And so, yes, the Venn diagram of like women who do used cars and tech is small. And, you know, the way I see diversity and inclusion to some degree, I think I just said something else, was a chicken or the egg, but I also see it as fairly chicken or the egg, which is, it's about bringing in more diversity, but it's also really about looking at our structures for how decisions get made. And so building those inclusive cultures. And, you know, my experience was, it was my first time doing fundraising. I hadn't studied entrepreneurship. I really knew very little. And marching into Sequoia Capital or Lightspeed or whoever else, you know, it wasn't just about being female. It was just also a certain personality type of, you know, am I going to need to go to the partner meeting and bang the table and feel confident in my 5-year projections, which is not necessarily my strong suit. And so thinking about how do we make sure, and you know, it's very similar to the way Google made decisions on Google product strategy meetings, was you had to go and argue for your engineering allocation. So how do we make sure that we're being very thoughtful about the structures that allow people to succeed, so that we're not just sort of bringing people in and, you know, and then not setting people up for success. So, you know, but, you know, Crimea River, like we raised $100 million, like right. I'm not, I think that, so that's kind of a, yeah, so it's sort of a, how we think about that. I think one interesting thing I've seen is on Zoom, there isn't that home court advantage anymore. There isn't you're not sort of showing up at someone else's office where they're all, you know, comfortable and already assembled. And I think there's something about pitching in pajamas that, you know, is a little bit, I think it's actually leveling the playing field in some regards. So I actually am interested in how this whole past few months is playing out. I also think obviously it's allowing us to meet people in diverse geographies, but it also is taking away some of the serendipity. So, you know, there's puts and takes, and I think it's, you know, I appreciate that the conversation is front and center, because it's certainly not going to change if it's not a front and center conversation.
And now that you're on the other side of the table at 10110, how do you ensure that diversity inclusion at the firm and also at the portfolio companies is getting the attention that it needs and that it deserves?
Yeah, and there are different answers to that. I mean, so one of my colleagues is an African-American man. He and I sat on the same panel, and after the panel, he and I write the same checks, we're at the same fund. After the panel, all of the people of color line up to talk to him, all of the women line up to talk to me. And so so as I said, there is something to just increasing the representation at the table and being visible that is useful. And I also think about my own mentorship and where, you know, what has really, you know, affected my life. And interestingly, like the moments that stand out for me have been very spontaneous. They haven't necessarily been, you know, designated mentors of mine, but they've been small acts of kindness that people have bestowed upon me that have had these sort of butterfly effects. And so I think about that when I conduct my life, which is I don't need to be in a mentorship role here, but maybe I can say one thing or take one extra meeting with someone who I might be able to have that effect on someone else's life. And so, you know, it's a little bit of just how I approach my everyday living.
Barry, do you want to talk about what you're doing at Lightspeed?
Yeah, both Lightspeed hat and my NVCA hat for the industry. You know, I think as a white male, you're either part of the problem or you're part of the solution. it's pretty easy to be part of the problem. You just do nothing. To be part of the solution, it takes a lot more work. And we talk about why is diversity and inclusion important for industry, and we have all these reasons why it feels good and the right thing to do. And I agree with those reasons, but I think there's also a business imperative. And that is, as a venture firm, you're trying to reach as many entrepreneurs as you can. And when you have a bunch of white males in a venture firm, you tend to network with white males and reach a lot of white male entrepreneurs. But there's a lot of entrepreneurs that aren't white males. So how do you reach the women? How do you reach Black, Latinx entrepreneurs? You got to have a team that reflects the population of the entrepreneur. So we think it's really important and an advantage to us if we can have a team that reflects the population. We had one female investor 4 years ago. We now have 10 on our investment team, which I think is more than any other venture firm. We have 3 Black investors. We have to do better in that, obviously. And one thing we're doing is we put together a scout program. Scouts are people that aren't Lightspeed employees, but they're out there investing our money on behalf of us in deals that we wouldn't normally see. This year, we decided to have a scout program that was 100% made up of racial minorities. And so, we put the word out in our network. We had in 2 weeks, 350 people apply and express interest, which was way more than we expected. We had 25 spots. We looked at their resumes and go, holy crap, we got to have more than 25. So we went to 42, which we felt was the maximum we could do and have a great experience. Also happens to be Jackie Robinson's number. And so we have 42 scouts this year that are investing our money on behalf of us, and they get the gains from those investments. 50% women, by the way, 50% men, 60% African American, 30% Latinx, and 10% Indigenous and Pacific Islander. So we're excited about what that's going to turn into. Hopefully, we're seeding the industry with the next generation of investors. Because one thing you always hear from people when they try to get a job in VC is, what's your track record? And it's like a chicken and the egg thing. Well, we're going to help our scouts develop a track record.
Wonderful. Great. So at this point, let's tackle some questions from the audience, because the Q&A has been filling up quite nicely. So let's see if we can knock some of these out. So going back to tech developments, do you see a convergence between Internet of Things and healthcare? I think Minnie mentioned something about the shower, checking out our moles and things like that. What do you think will be the first signs of real commercial adoptions of solutions in this kind of convergence?
Well, I'll just a first step. I think that things like reimbursement codes for telehealth is allowing us to do a lot more from the home, which is, having a lot more connected devices so your doctor can know what's going on with you in the home. And, you have remote monitoring of a variety of things that feed back into the system. I think that'll be very interesting. And some of that is driven by regulatory changes, which I think is really powerful. Barry, how about you?
Yeah, I think the Internet of Things, I think when you combine doing things remotely, telehealth, as they call it, with something that is palpable, something that provides some input from the body, I think it becomes much more powerful. Even stuff like we're seeing solutions for PTSD and depression that are combined with devices that take a physical measurement of your body at the time on various things that can help you self-manage yourself in those kind of situations. So I think we're really at the forefront of this stuff, but we know we have a lot of issues, and we have baby boomers are getting older and all that kind of stuff. So we've got to get better at health. And how we administer health and how we lower the cost and be more effective with it. So I'm excited to see what's going to happen.
Very good. Here's another interesting one in terms of looking further ahead than the horizon. So if you look at 10 to 20 years, And the question is, will the same handful of mega cap tech stocks, I guess your Amazons and your Alphabets and such, just get bigger and bigger and more dominant? Or where there'll be upstarts, where do the upstarts muscle into that category? And if so, in what sectors might that happen? Is it AI? Is it biotech? How do you see the future of these companies?
Yeah, Barry, tell me where to invest.
I was going to say, if I knew the answer to that, I wouldn't tell anyone. But you know what's funny is if you go back to 2000, the 5 most valuable companies in the world, none of them were tech. And today, I think all 5 are tech, with the possible exception of Berkshire Hathaway, which now is making tech investments. So tech has really changed the world and become sort of the engine of the economy. The question is, which 5 tech companies will be the most highly valued? I think it's going to change. I think we're going to see a changing of the guard over the next 10 or 20 years. We have to. If there's innovation, we're creating these big companies. I mean, Amazon, 20 years ago was a $300 million company. So we are going to see a new set of companies. And again, if I knew, then I would tell you. But I think it's going to be a company that solves these major problems we're talking about.
Yeah, and people often talk about platform shifts, right? And so, if we're all doing, if there's a major platform shift into voice as an interface, is Google still going to have its dominance in as sort of a, information accessible via voice? Not sure, right? And so, but Barry, I like you keep bringing us back to solving the most important problems. I agree with that.
And what are your views on, here's another interesting one. What are your views on blockchain and cryptocurrency? That was all the rage a couple of years ago, and there's still a lot of excitement from some people around that, but it doesn't seem like it quite hasn't delivered on the promise that many people saw. Where do you see that going?
It's a tool. Go ahead, Barry.
I'm not a blockchain expert. I think there's some core technology that's interesting, but I'm not an expert in this space. So I can't really answer that.
And I was just going to say, I think it is a tool. I don't invest in, I don't invest in blockchain, but I've invested in Ripple or something that is solving, at its core, what it's solving, let's say, is, the movement of money across countries. We don't have a real-time Federal Reserve in this country. Like, if there are things being solved, but blockchain is sort of the tool to reach those big sort of game-changing solutions. I think I see a lot more pitches where blockchain is not on the front page, but when you dig deeper into how the thing was actually implemented, it is, built on the blockchain.
Very good. What about investment at the very early stages, like pre-Series A? There's been a lot of newcomers in that space in terms of accelerators and such that have been doing a lot of that. Where do you see that heading? Do you think those accelerators are here to stay? Do you think that moving more into VC land? What do you think is going to happen in that space?
That's for you.
You go ahead.
No, go for it. That's for you. Yeah.
That's what I was going to say. Is it's interesting to be at a seed fund and see all the big funds that now have huge amounts of money to deploy, and they're moving up market, down market. They have, they're moving into the pre-seed world and moving into the growth world. And there's just, we talked about this. There's a lot more capital in the private markets right now. I actually think accelerators are getting squeezed for the most part because, I don't want to pick on anyone, but like, you get $20,000, you get $50,000, I'm going to take 10% of your company, doesn't work now because there's so much capital that everyone is providing more services. A pre-seed fund might actually have a lot of the services that they can offer that traditionally you would find, mentorship, helping you raise your next round of funding, weekly meetings, all of those things you can now get for a much more traditional looking investment. But there's a lot of money. My most recent check was a $4.5 million raise on a 13.5 pre-money on someone who didn't really have a deck yet. I mean, it's that crazy right now. So there's just a lot of money chasing other money, which I think has had a good experience for entrepreneurs because VCs are not bad actors anymore. They can't be because there's choice and you'll go somewhere else.
Yeah, I mean, we like doing early stage. We do a lot of seeds. We seeded Snap, as you mentioned earlier, which turned out to be a very good investment for us. Um, but yeah, we want to be there as early as we can to work with good entrepreneurs and get a large piece of the cap table. There's a lot of alternatives though for entrepreneurs now. There's some really good angels and solo capitalists, as they're called now, that are investing either their own money or a small fund on LP's behalf. And those are all viable options and people that we need to learn how to work with in the early stages to be successful, because we can't just be coming in at the B or C rounds. You can't get enough ownership to make a large fund work.
And putting yourself in the entrepreneur's shoes, how would you decide, how would you make that trade-off between, do I go with an angel? Do I go through an accelerator program first? Do I go with a seed VC round? Like, how would you make that decision? What are the pros and cons?
I think it kind of depends at what stage you are. And then you match your investor with sort of what stage you are. And if you still are newer to the world of venture and you want a heavy, involvement, our fund is a local fund. We get to know entrepreneurs quite early, and we work very closely with them. And for us, if we write a $500,000 check, that's a big deal to us. And we're gonna, or $1 million check, we're going to be very focused on that investment. Where, if you are deploying a $1 billion fund, $1 million check might not be as core to your strategy. And so I do think you want to match your investor with what your needs are. And you could have very different needs. You could just say, look, what I'm looking for is a lot of product help, or what I'm looking for, so depending on what you're looking for, I think there are more options now.
Yeah, I think that's right. I think there's lots of choices. Some entrepreneurs aren't ready for VC yet. They don't. When a VC invests in you, typically they're going to say, "Okay, let's get going now. Let's put the pedal down and start running." And sometimes companies aren't ready for that, so they take a seed round or they take individual money or accelerators. I think that's great to get yourself ready for that. Having said that, we're happy to come in early and roll up our sleeves and help companies, build themselves and do all that work. But I think it's good that there's choices, good for entrepreneurs.
Well, here's an interesting one. So we've talked quite a bit about what do we see will change going forward. Is there any elements of venture capital that's so core to the industry that you don't think is going to change going forward?
That we don't think is going to change. Wow. I don't know. I don't know that there's any pieces of venture capital that aren't subject to change. If we don't disrupt ourselves, some other industry will disrupt us. I mean, we're early capital to help companies build themselves. There's lots of ways to get capital, but we've got to provide more than capital, right? So
how about partnership?
If you don't adapt, you'll die. I mean, you say that about every business, right? So every industry. So if our industry doesn't adapt, then we'll be disrupted by something else.
How about the limited partnership model? There's been some changes, particularly if we look at private equity. Some of these firms have converted to C Corps with changes in taxation and things like that. Do you foresee or do you see any pressure on that model in VC?
We see a lot of different LPs coming into the market. We like the LPs that have their own capital and are long-term investors in venture capital through thick and thin. We've been in a 10-year bull market, so it's been easy to be an LP in venture capital in the last 10 years, but we're going to go through a down cycle at some point, and we'll lose. Some LPs will leave because they're tourists. But we like the LPs that are here to stay, that believe in the asset class as diversification from other asset classes. That's what we're providing a high risk, high return asset, right? So if we can find the next Facebook for you, or Amazon or Snap or whatever, it's going to pair well with your other asset classes.
it goes back to the other question that we didn't have good answers for, but what won't change? I was going to say what won't change is that we will be serving entrepreneurs, like that ultimately, like, I think like a product manager, and I think, what is best for the entrepreneur as a guiding star, but actually it's also returning money to the LPs. And maybe those are the core things that our business is built on. It's pretty general, but I think coming back to those, a lot about VC is going to change in service of those two sort of customers.
Yeah, I agree with that. I hear a lot of people say, VCs need to be founder friendly. That's a relatively new phenomenon. I think there's a lot of definitions of founder friendly. We definitely need to be there to support our founders. We need to be LP friendly, right? Those are our customers. And without them, we don't have a business.
So talking about this, there's a lot of talk recently, and maybe Barry, you have some more direct experience with this. There's been a lot of talk about allowing 401k investors to invest in venture capital, maybe through some lifetime funds or some other mechanism, which would change, if that were to come to pass, would change the makeup of your LPs. Have you had any discussions about this or thoughts about how that might play out, or how that might change the landscape for you as a VC?
I think this is an ongoing SEC effort to allow Main Street to participate in the innovation economy and the investments that we're making. I think it comes with some caveats, though, that, when we invest in companies, if individuals want to invest in companies aside, is be prepared to lose all your money, because that happens to us every once in a while. And investing in venture funds is by no means a secret to, getting a great return, because we go through cycles. There's some funds outperform others. So I'm not a huge fan of trying to just open up the floodgates. People need to understand the risks, and they should be prepared to only allocate, a small portion of what they're doing to venture versus the other asset classes, because that's how, endowments and other places are run. So we need to educate people on what our asset class is all about before we just open the floodgates.
Yeah. And there would be some issue with target date funds if people can move in and out. How would that affect the LPs? Once you sign up for once you commit to a venture fund, you can't get your money out. So I don't know how that's envisioned to work if people can get in and out of their target date funds, but the target date funds themselves can't get in and out of their VC investments very easily. How that's supposed to work out. What about on that note of people being prepared to lose their shirt once you invest in VC? What are your views on crowdfunding?
Yeah, I just interviewed someone on my podcast who said that he's raising 50 to 100K a day on Seed Invest. So, equity crowdfunding, not crowdfunding like Kickstarter for a product. But I hadn't realized, this was, one data point, but I hadn't quite realized how big the Seed Invest type platforms have gotten, or just, how much more mainstream they are, and that you can, raise a very serious, Series A $10 million style investment now. I still right now, believe at the early stages of a company, there is benefit from having, a VC there who is, at your side, as opposed to a purely crowdfunded thing. But it's an interesting opportunity for everyone to participate now in the early rounds of investing in companies, drawing just from a much larger base.
So when we think about
good questions, by the way.
What's that, sir?
Very good questions.
Lots of good questions.
I'm
sort of trying to skip through the Q&A and sort of cherry pick some, but there's so many to choose from. It's very hard. Let me ask you this one, sort of coming back to the issue of diversity, but sort of thinking about this in a somewhat broader setting. There's a lot of discussion about ESG nowadays. Is this something that you feel your LPs sort of pressuring you on in terms of do more ESG, do more of this, do more of that? Do people ask more for site letters in that respect? What are the trends you're seeing there?
Yeah, our LPs don't. They should, but they don't. It's a good way to get, but we're doing it ourselves. I don't think we need anyone to prod us at this point. We've already committed to driving those programs internally, but I think the LPs need to stand up. They are the money that comes into our industry. They need to make themselves heard to our industry.
Mm-hmm. Mm-hmm.
I was going to say something similar. I've talked to a couple of VCs recently who have, very robust sort of tracking their impact metrics in their chosen investment area. But, increasingly in my career, I just think it's follow the money, and that's where the influence is. And I'm learning that over and over, but certainly with LPs, they can drive our industry, more in many different ways, and they ought to be.
What kind of dog do you have?
It's not mine.
Oh, somebody's.
The only thing I'll just riff on, because we are at like the risk of losing all your money. The thing I would say to entrepreneurs, and this is a point I want to come back to, is it used to be that to be an entrepreneur, you had to also really risk your career to some degree to be an entrepreneur. I think all of that has changed. And maybe that's an obvious statement, but it used to be that, you didn't look good on the resume. If if you failed for a couple of years, you wouldn't get paid well. And I just think all of that has changed. And that's going to be a huge driver of our industry, is that entrepreneurship is just such a great opportunity for people coming out of school and otherwise. Arthur, you're just...
You didn't ask a question about what the Biden administration is going to mean for venture capital, but
tell us.
Yeah,
I'll ask it. I'll put it in there.
Let's tackle that one, and specifically thinking about issues of immigration and the environment, things like that. Let's dive into that.
Well, it's interesting. I mean, we know part of the puzzle. We think we know who our president's going to be. And we don't really know what the Senate's going to look like. And that's sort of a balance of power thing that's going to tell us how much stuff will get done. But we know that the Biden administration is going to want to invest in infrastructure. That's a huge opportunity for our industry. They're going to want to deal with climate change. That's a huge opportunity. They want to create jobs. That's a huge opportunity. Immigration, I think they're going to be friendlier to immigration than the current administration. Having said that, things like the startup visa and stuff like that is, the Republicans have a view on immigration. I don't think that necessarily that view changes with a different president. So I think we're going to have a lot of discussion about immigration. My own view is that if someone comes to the United States and creates a company that creates American jobs, they ought to be able to stay, right? We got to keep them around. That's what we're trying to do. But I'm one person.
What about in terms of attracting employees? Do you think there's going to be a change in that respect? And particularly employees from abroad?
Well, I mean, that's H-1Bs, right? People have to come here to work under visas. And I think that there'll be a loosening of that. It's an important source of talent for our industry. And if they don't come here, they're going to go to other countries. I just think we ought to be promoting entrepreneurs from any part of the world that want to come here and build companies and create jobs for the United States.
So just for our understanding, how first order of an issue is this for your portfolio companies? The fact that you may or may not be able to attract somebody from a foreign country as an employee.
At any one time, there's probably 5 or 10 portfolio companies in our portfolio that are dealing with H-1B visa issues. Mm-hmm. So it's an important item. And then the whole startup visa thing is more of a longer term concept, but that just says, hey, if you look at a lot of the great companies that have been created by venture capital investment and by entrepreneurs, they're foreign entrepreneurs. Elon Musk was not born in the US. He's done pretty well. He created a lot of jobs in the United States. So, and there's a long list of entrepreneurs that have come here and done that. We ought to let them stay.
I mean, I think it's kind of obvious, but if I had to estimate how much of my time was spent doing what function at Shift, I would probably say a third of my time was recruiting. And so, what is our limiting factor here? I was going to say it's pretty obvious, but like when you go to Google as a product manager and you're asking for resources, you are not asking for money. You are asking for the limited resource, which is the engineering talent for the most part. And so, that is the bottleneck to most of our companies, is being able to free up some of their time. And meanwhile, many of our companies, have overseas developers for sure, and overseas teams. And that's just growing.
All right. Here's another question about corporate venture capital. Right? So that seems to be a cyclical thing that comes and goes. Right now, in the last couple of years, it's been very prominent. Have you co-invested with any? Have you syndicated with any corporate venture capital investors? How is that relation? Where do you see that heading in the future?
I think it depends on the corporate, right? And Barry probably could opine on this as well, but I think different corporate investment has different motivations behind it. And so when we think, definitely we have co-invested with different corporate venture arms, but also when our entrepreneurs are looking at funding, some corporate venture is done very separate from the corporation, right? So it's really motivated by returns, and the managers are compensated by their returns. And sometimes there's a lot more strategic ties to the company that sort of makes it more complicated. And so I think just digging into how things are really structured, how are people compensated, is just a worthwhile exercise when you're talking about corporate venture. How fast do things move?
Yeah, I agree with that. I think there are corporate venture capitalists that have been around for a long time, investing alongside VCs, companies like Salesforce and Cisco, that do it right, that are great partners to have alongside. There's some that have come rather more recently and are probably learning how to be part of the cap table and help the company and not have divergent objectives from the companies. And so I'm a little more reluctant with some of those that have come more recently.
Very good. Yeah, Aske, there have been a few questions on sort of surrounding the same or circling around the same issue. And this is somewhat self-interested. There's a lot of current students, I think, in the audience and in general that will view this. What kind of advice would you have in terms of how to best prepare them if they want to be an entrepreneur, if they want to be a venture capitalist themselves? How do you see them setting themselves up for success in the future? What are the things they could be doing right now?
That's you, Minnie. You started a company. Let's hear about it.
But I think there's no direct path. Like, I think I've seen people succeed, who went to a startup and drank from the fire hose and got exposed to everything. And I think, obviously I think startups are great because you do have just this fire hose experience. And that then puts you in a seat to really understand what starting a company entails. I also think that there's something about going to a big company. And so when I started Shift, I copied everything that Google had done because I wasn't going to reinvent like the HR, how to give a 360 review and all of those things that Google had, I forget, like 1,000 people in HR just doing, figuring out how to do these structures. And, when I first became a parent, someone said, well, how do you know how to parent? I was like, I don't know, but if you had good parents, it sort of helps. And so, if you saw a company work really well, it gives you a sense of what a functioning company looks like. So I did not answer the question. I just gave my two sides of the coin.
Or maybe a different way of asking the same question is, what are the skills that you think are necessary or helpful in breaking into the industry?
I mean, I'm also a believer in start doing things, right? Like that is the story of my life. But, if you want to, I get asked sometimes, how do you break into venture capital? Well, if you're just always throwing in, whether it's angel checks or seed investor, you're going to the meetups and then you're sending your deal flow, you don't have to be investing necessarily, but you're seeing a lot of great things. You're putting yourself, like most VCs are not on the USC campus right now. And knowing what's interesting coming out of the engineering school, the business school, whatever, but most students at USC are. And so, putting yourself in that mix and then, being able to parlay that to someone like me who's no longer, on the campus, that sort of thing. So I'm a believer in, you can start doing things. And if you have a passion, you can start pulling at that passion. One of my friends talks about like V1 liftoff speed of an airplane, but it's like, you've got your V1 marker and you say, look, once my side hustle is making a third of my income and, my spouse is in a stable place, that's the point where I feel like I can pull the trigger and jump ship. But you kind of have to think for yourself, when does this passion actually merit, quitting your job?
I think as an individual, you got to really understand yourself, right? What makes you tick, what things you like doing and what you don't like doing. I never thought I'd be a venture capitalist. I didn't even take the class in business school. It wasn't until I was 34 that I started doing it. But, I would say experiment, try startups, try big companies, see what you like. Do you like wearing many hats in the startup, or do you like being, having more of a game plan in a bigger company? Do you like the pace and the unknown of a startup, or do you like the known of a big company? And I think you got to try it out. I'd encourage people to do both and see where you fall. Not everyone's cut out to be an entrepreneur. Not everyone wants to be in a big company either. But you got to test out and you got to try it before you know. And sometimes it can take a while because you're developing also your internal skills and you're figuring out what you're good at and what you like to do well.
Oh, I'm gonna piggyback on that. One other thing at Shift was we had a few people who just knew that they wanted to join Shift and did the 10-point drip campaign on getting us to hire them. Admittedly, we attracted a lot of car enthusiasts, but these were people who I said, no, we don't have a spot. I said, no, we don't have a spot. They showed up the next day. I was like, who are you? Oh, I'm the guy who emailed you 5 times. And eventually, if you do know what you want to do, being persistent, Elon Musk is going to go, land on asteroids or something. You can get a job at the startup of your dreams if you really know that's what you want to do. But I do think persistence can help.
So we're getting close to our cutoff time, unfortunately. Yeah. So let me ask one final question, and then unfortunately we'll have to wrap it up for today. Do you think, and I said we weren't going to talk about COVID, but do you think there's anything that we've learned from this crisis that you think will stick around for the longer term that wasn't obvious before?
Investing works well on COVID. There's a lot of deals getting done. So from a just self-centered view, I think that we're all still very much writing checks, that sort of thing. I think, my biggest lesson is kind of, man, as a species, we are adaptable as a species. We have figured out new ways of doing things, and all the new ways we figured out have created interesting opportunities for entrepreneurship, whether that's, in doing education remotely or doing healthcare remotely or anything else. We are adaptable.
I would say, for me, the one thing, well, several things, COVID, but one thing that sticks out is I think it gives you some perspective about what's important in your life. I mean, we're all talking about our jobs here, and what we do and all that kind of stuff in our school. And that's great. But at the end of the day, COVID has brought us, I think, closer to our families and friends. And we figured out how to stay in touch with them and deepen those relationships. And that might be the silver lining that is COVID, if there is one. But for me, it's been a real learning experience.
Wonderful. Well, on that note, I hope we can all stay in touch. Unfortunately, we'll have to call it quits at this stage because we're fast running out of time. Although we've had plenty of questions, and I'm sure we could keep talking for hours. We're going to have to end it here. I want to extend a very big Trojan thank you to both Barry and Minnie for sharing their knowledge and their insights with us today. Thank you all for listening in and for participating. We hope you will join us again for future webinars. Stay safe, stay healthy, and have a great rest of your day.
Thanks, Arthur and Minnie.
Thanks, Arthur and Barry.
Thanks, everybody.